What's going on, guys? This is Adam, or at Swissmade Trades on Twitter. Just gonna go over some price action in ES today. Go over the past couple days. Give my 2 cents. Some news just came out from North Korea that they successfully tested a hydrogen bomb, and we are bouncing a little bit. So, thank you for that news in North Korea. We'll see if this lasts. Based on the cloud, obviously, we're not looking too hot. But what happened the past couple days? Let's start with yesterday. Coming off two straight down days going into yesterday. I wish this cloud wasn't incomplete because this Kijun Sen just totally nailed this right here as a perfect spot to short. You were just made so much bank. Anyways, let me actually hide these levels. There we go. So, yesterday, what did we have? We had this big spike down. And anyone who knows me knows I like to always talk about spike and channels. If something works, if something's reliable, I will talk about it day and night. It's just the way I am. I guess most traders would just keep it to themselves, but that's not me. Let's make this pretty and visible. Save the default. There we go. Spike down. And then what do we look for after spike downs in ES or any underlying, really? We look for a channel. Boom. And boom. You need at least 2 touches on the top. We have 1, we have 2, we have this mess over here, and down here we have 1, almost 2, and then we have all this action down here bouncing off the channel. So that's clearly a channel. Will it always come out this perfectly, either in ES or in stocks? Hell no. I'm so glad this was clean for my first video, because it definitely gets uglier than this when it comes to channels. Sometimes it can poke out 2 or 3 times, but it still resembles a channel. And if it has a spike and it resembles a channel, then more often than not, I'll be like, okay, you win spike and channel. So spike and channel, right? So what do we expect of a spike and channel? Well, for one, we expect the channel to be broken at some point. Now, if it breaks in the opposite direction of the move, here we have a bear spike and channel, spike down, channel down. If it breaks upwards out of a bear spike and channel, what we would expect, first of all, is a retracement of the channel, a retest of the channel. Now, I've seen spike and channels break, retest once, and then retest twice, and then shoot up. Or I've seen it just go. This one kind of did a mix between just going and a retracement. It got within, 4 points, and it's not going to work out perfectly each time. Just like these channels aren't going to work out perfect each time. But with experience, with practice, and with with an eye for the markets that you kind of just gain by learning stuff and then looking for it and then applying it or trying to apply it, you kind of learn to just take what the market gives you. The market doesn't work for you. You work for the market, and then hopefully you're paid by the market and you're not paying it. So, bear spike and channel, broke the channel, almost retested it, and then going into the close. If you're in the Pips options room chat, then you probably saw me talking about an MOC order that was being placed of north of 2.5 billion. Now, when it comes to MOC orders and ES, anything over $1 billion, in my opinion, this is what I've been taught. This is what I've learned, what I've noticed. Over 1 billion is significant. Now, what do I mean by significant? I mean, I will take a trade if an MOC order is over $1 billion. Now, if one time or several times I've taken trades where it's 1 billion, 1.5 billion, and once I hear that, I will just place the trade in the direction of those MOC orders. Because what happens is, at 3:45 Eastern Time, obviously, those orders get locked in. Now, there are exceptions. say JP Morgan threw 150 million to sell, but they meant to say buy. They can call and be like, "Oh man, I meant to say, I meant to say buy. Can you change that for me?" They'll do stuff like that. But at 345, once you hear an MOC order of $2.5 to $3 billion, the odds of that going in the opposite direction or being under $1 billion is just ridiculously low. And what did we see at 345? Here, my cursor's on 345. We saw a break through this resistance level, and we just went straight up. So not only did we have this bear spike and channel break, we had this MOC, this humongous MOC order, and you could have just rode that wave. I've taken trades before where it was just 1.2 billion, and you make 5 points in a couple minutes, and $250 a contract in a couple minutes just because Goldman and J.P. Morgan want to place a humongous fucking order is not bad at all. I'll take that every day because the pit traders, they have first access to those MOCs, and you can follow people on Twitter that provide that stuff. And once they hear that, they're buying too. Everyone is buying once an order that big gets put in. So that happened. But back to the spiking channel, bear spiking channel break. Then once the retracement happens, what you expect or what you look for is, at least in the case of a bear spiking channel, you'll look for the first price where buyers found resistance. So the first spot that a bear spiking channel finds resistance, so in the opposite direction. So let's go ahead and call these two candles right here is where they found resistance. Let's go ahead and call that 2010. Again, if you're in the room, I was saying 2010, watch that. And right up into the close, we were like bouncing up against 2010 over and over. And then after the break, it just shot through it. So you have a bear spiking channel, a break of it. You're expecting a retracement. Retracement almost happens. Then you hear an MOC order of potentially probably $3 billion. And you're expecting price to try to retest this resistance. So if you didn't get long, if you trade futures and I was in your ear telling you this stuff and you didn't get long, I don't necessarily feel sorry for you. Sure, you don't really have much. This is kind of no man's land from the channel to the first point of resistance, so I kind of understand that point. But just based on market feel, this is a trade you take, and you could have made what? So you got 975. Even if you sold at the close, you could have made 15 points. If you have a rule about you sell at 10, you could have made 10 points. $500 a contract. Again, not bad at all. Okay, and then once you make that trade, you have to stay nimble. You have to stay vigilant. Like, okay, this happened. Nice, bullish, bullish, bullish. Oh wait, this is a fat ass red cloud. There's no way that I'm gonna try to hold if price gets up here. Or there's no way that regardless of people in the room saying turnaround Tuesday, which we did have turnaround Tuesday, started right here. Usually starts on Monday, the turnaround Tuesday, either midday or afternoon, which we saw in the afternoon. Boom. But you can't just be fully committed to bull or bear, especially with a chart like this, with this fat red cloud telling you, hey, this is a big area of resistance. Now, once we break through 2010, we have this cloud just completely nailing this as resistance. Now, would I recommend waiting until the very tip of the cloud to place a futures order or an order on a stock? No. Sure, you're going to get the best bang for your buck when it comes to risk reward, but you're going to take maybe a quarter of the trades you would take if you gave yourself, a point or a point and a half off of this to get into the trade, and then give yourself a couple ticks, a point and a half outside the cloud. Say, let's see what this is, 2017.50. Let's say that's the top of the cloud. This candle got up to 2017. So 2 ticks. If you give yourself a point, you'd be in at 2016.5. You would have been in this trade and give yourself a stop up here. You would be in this trade, first target being the Tinkinson. If you want to do that, I don't really care about the Tinkinson too much, aside from the signals it gives in regards to the Kijun-sen. But as far as support and resistance, not the best, not the most reliable. Personally, my first target would have been the Kijun-sen, and then you could have just been scaling out here if you had multiple contracts. But at the same time, some people don't like trading overnight or pre-market in the OPEX because look at this volume. There's like no volume, easily manipulated, or so people think. It is it is easily manipulated. Don't get it twisted. But if you have levels and your chart is telling you, hey, this is extremely high risk or low risk, high reward trade. First target down here at 2,000, you could have gotten in at 2016.5. Even if you got out here, you could have gotten what, 11 points, 10 points, 9 points, $450 per contract. It's not bad. Especially OPEX. You take what you can get in OPEX. So yeah, you could have made money there if you trade futures. Now, if you trade options or strictly options, strictly stocks, or you just don't trade futures, just look at this. You would have made no money off this move, off this beautiful cloud here. You made no money, which is fine. I'm not telling you have to trade futures. If you don't want to trade futures, that's totally up to you. If you are day trading, though, I don't see why you wouldn't. In my opinion, futures are so easy to get short, so easy to get long. You don't have to worry about theta, really. You don't have to worry about the Greeks. It's just a chart, and the fundamentals and the technicals together. It just makes more sense to me, and that's why I like to trade them. But that's just me. Everybody has their own style, their own personality. So don't be swayed by my comments. So we opened pretty much near the close, and remember Netflix was up pretty big. We had a bunch of gap ups, even though we didn't really open ridiculously strong. But whatever. I guess this is strong, but compared to where we closed, there wasn't really anything ridiculous. Buyer failure here, buyer failure here. After buyers failing there, we got shot down into the cloud. Popped back up, which is good. But at this point, right here, this worried me. Now, because the Ichimoku cloud is a trend-based system, once chop happens, like this is chop city. Like all day, it's just chop. And once this happened, I knew that the chop was affecting the cloud as far as its reliability. Because, sure, you can say this is a sideways trending market, but the way the cloud works, it just works better in a market that's trending up or a market that's trending down. Once this chop starts happening, you start getting weak signals. And once this happened, I knew to just avoid it altogether. We had buyers failing again right here and again right here before we just got crushed. And I think this is when the initial reports came out about North Korea. And then now that they reported that it was a hydrogen bomb, we got a little bounce. And there's a technical reason for that too. We'll get to that later. But yeah, once you have sort of this sideways just chop fest, and you start seeing stuff like this, where the cloud just was like not really respected. It was kind of respected here, but once you get all these poke throughs and then you actually go back up, fail the Kijun-sen here, but still, once this happens, and all this chop, you just know, maybe take a step back and let the market figure itself out. Because in my opinion, that's what it was trying to do. It didn't really have a catalyst to go either way. We kind of shook off the China hangover, but not really. We didn't really have a reason to go up, I guess is what I'm trying to say. As far as what happened today, we did have a little tick charts. You have to be careful about drawing lines. We did have a triangle. Boom. And boom, number 2 touches. All you need. You look like a genius. There you go. So we had this triangle. Started overnight. Had this big range in OPEX. And we actually didn't break the overnight highs or the overnight lows, which very, very, very rarely happens. Sorry. I'm tired. So we have this triangle. Call it symmetrical triangle if you want. Or wedge. I don't get too fancy with the pattern. Spike and channel and double and tops, triple tops and bottoms are pretty much my namesake aside from the cloud. So we had a breakout to the upside. What do you expect when you break out of a channel, or you break out of a trend line, or you break out of a cloud? You are going to have retracement. So what do we have? We had a retracement. You could have gotten long here if you really wanted to. I wouldn't play that. I like to play off the cloud or a $3 billion MOC order. So we had the retracement, popped up, buyers failed again after hours, and then we just got pushed back into the cloud, and then we got crushed on uncertainty. Uncertainty is king. Once fear takes over, that's when you get bear markets, and not a second before. So actually rebounding nicely off of the hydrogen bomb news, I guess. Hydrogen bomb is good. I guess there's something that it could have been worse. Or maybe they're just bullshitting. Who knows? It's North Korea. Checking my phone. Yeah, I don't see anything else besides them celebrating. Good for them. We'd still blow their shit up. So yeah, at the moment, this is obviously bearish. I don't care if we're in Chop City or not. We just came off 3 days of selling. We had a 3-point, I think, positive day today. So 3 days down rule came true barely. We had an up day, and now technically, based on the other charts, based on the other time frames, which we'll take a look at those, will determine the overall trend, because this isn't reliable right now. This is chop still, and we're still in this tiny range that we formed into the close and after hours yesterday. So, I mean, if you wanted to trade off this, you could get short up here. If you're trading futures, if you're holding SPY puts, you look like a genius, I guess. If you know someone in North Korea, then that's good for you. But I don't know. I didn't play the S&P because Chop City is just gives unreliable signals. So let's get rid of this. I would have kept that level, but it wasn't really respected after that. We're kind of there, but I mean, I like to make price levels based on longer time frames, and that is what we'll go to now. Let me get rid of this. So it's 1 hour chart. Zoom in. What happened last night? Oh yeah, this cloud, right? Look at the 1 hour chart. Oh, came up to the Kijun-sen. So in 2 time frames are telling you, hey, this is a spot to either get out of a long or start thinking about getting short. I mean, that's just going to work out like gangbusters, really. You can only ask for much more than that. If you have 2 or 3 indicators or 2 or 3 time frames, or 2 or 3 indicators on 2 or 3 different time frames, if you don't take those trades, then maybe you shouldn't be trading, or you just need to find a system you believe in, because you don't believe in it enough. I mean, look at the Kijun-sen is just doing work right now. Not much more you could ask for. As far as a signal, they had the 1 hour and the 2500 tick chart telling you to take the trade. And we had a nice bounce off of this RSI. Mind you, this RSI is meant for time-based charts, not for tick charts. So if you were looking at it on this, don't. I mean, sure, you could say it worked there, but it's just not what it's designed for, and it's not nearly as consistent as it is with time-based charts. Look at that. It actually bounced just now. That's when I said it bounced for a technical reason also. That's what I was talking about. And that's also when they said it was a hydrogen bomb. So say what you will. I'll blame it on RSI. You can blame it on the news. Both are probably right. So yeah, I mean, we just couldn't retake this Kijunsen line, and it even came down for us. And then, if you bring this level back, we just failed all along the Kijunsen. Not bullish, not bullish at all. Go to the 4-hour chart. Still bearish underneath the cloud. Haven't even come close to the Kijunsen here. Not looking good, obviously. And so if you wanted to trade off this, you don't. It's chop, and then once you start looking at longer time frames, you're like, oh yeah, we did have 3 down days in a row. That is not bullish. So if we go back even more to a daily chart, oh yes, a fat green cloud. And let's try to, this is my favorite spot to try to draw levels, significant price levels. So let's see what we got here. So the all-time highs are around 2106. Remember, before we did the contract rollover, it was 21. It was in the 2130s, I want to say. So we did get close to all-time highs technically on this contract, the ESH, the March contract. So food for thought. See where we can find some support. Boom. Now, if you read my watch list, I believe it was 1978 on there, significant level. That was because of this Kijunsen, this long Kijunsen on the daily. On the daily chart, I give that probably a lot of respect, obviously, and the weekly chart because it's longer and it has stronger signals. So that's where I got that level from. Yesterday, on Monday, we actually came within 2 points of that. So if you want to make that a key level to hold before we retest this daily cloud, that makes tons of sense. And you could say that these two lines, 1978 or 1980, I guess technically, to 2106 or 2100 is the trading range we're currently in. I had 2 bounces up here. Definitely an M pattern double top without, I mean, it broke that, but it wasn't what you would expect. You would expect doom, a little pullback, and then just death, but that didn't happen. There's no real reason for it to. I mean, bulls and bears get excited. Usually bears get excited down here, and then bulls get excited up here, when bears should be getting excited up here, and bulls should be getting excited down here. Because, I mean, you sell high, buy low, sell high. And if you have levels based on charts, then you should know that buyers have failed all along that level for quite a while. And I don't really see anything changing that right now. If it happens, it happens. But until it happens, it hasn't happened. So, words from the wise. So, 1978 breaks. Obviously, going to seek the cloud. We on the watch list I had 1958. That's right at this long flatbed. That's a long fucking flatbed. So definitely respect that level. I guess you could come down to the bottom of the cloud and say 1942. But this long straight, just this long flatbed is, that's a signal that that should be strong support. And if not, then we're just gonna retest. Let's look at a weekly chart. I mean, we could just retest all through 1900. I guess the first stop would be 1800, excuse me. I didn't mean to say 1900. Yeah, we could just really lose our shit here. But we don't seem to be reacting too terribly. At least the computers aren't to the H-bomb news. But it's still early in the night. Anything could happen between now and the market open. I think another level I had on the watch list from Sunday, 2020, 2018? It's 2018? Let's call it 2018. It's based on this little flatbed here. I try not to get too many of these little ones in there, but Let's see if it worked out at all. What do you know? Line up perfectly with this cloud. So we had flatbed telling you this is resistance, 2500 tick chart telling you that it is resistance, and then you have the 1 hour Kijun. Look at that. Look at that. You can't script that stuff. That doesn't always work out like that, but when it does, you have to make sure you get it on video. Anyways, so that's kind of where we are, guys. And we're still in a trading range. Don't get too bullish. Don't get too bearish. I doubt Kim, whatever his name is now, has the balls to shoot at America. I don't know if they have the range to do that. I'm sure a lot more news will come out between now and the Open, and even then, even more news will come out during the day and probably the rest of the week. So, the world's watching that right now. We'll see if that affects us, if that adds some fear, some uncertainty to the markets. I'm not sure if that's going to affect Apple's earnings or Amazon's earnings, but the market isn't an efficient machine. It's efficient, trust me, when it comes to retracements and stuff like that, but this thing is driven on fear and greed, so we'll see if fear wins the day tomorrow, wins the day the rest of the week. 1978 breaks, 1958's on deck, and if you look at the RSI on the daily, this is actually another important point. Remember, RSI is reliable on time-based charts. A daily chart is a time-based chart, so it is reliable. Obviously, you can see boom, boom, boom. Nice bounces. Don't even count that. But if you have this coming to the cloud, I guarantee you that RSI will be oversold. And now that's two signals on a daily chart saying, hey, maybe if the market shows some bounce, maybe this could be a decent trade. Would I get married to that trade? No, I'm not getting married to anything as far as a trade or in general right now. Because look at this. This is just dips and rips. That's the theme. It's been the theme. Even last year, not as dramatic, but look at, little dips, little rips, it took longer, but now it's just a couple days and it's just down, a couple days and it's just up. Wow, 5 days up, not bad. So just stay nimble, guys. Nothing moves straight up, nothing moves straight down. If fear takes over, yeah, it'll move straight down. But Kim Jong-un getting an H-bomb, we'll see if that strikes enough fear into the billions of dollars in stocks and stuff. So another thing I want to look at was the Santa rally, which lasted about 2 weeks. And even then, that didn't go straight up. We had a nice little retracement here, and then we shot back up. So ES is efficient. All right, it gives you, most of the time, it'll give you 2 or 3 chances to get into a trade. Like here, if you can imagine this cloud, it's incomplete because of the light volume. Broke the cloud, and then retraced. Okay, that's an opportunity. You could have gotten short here. So that's 2 opportunities. And then I wish this Kijun was here because the Kijun was right there. So then you had a third opportunity to get short right here. So there's no need for the fear of missing out. There's no need to rush into a trade. Wait for confirmation. Whatever system you use, it should offer more than one opportunity to get into a trade. And if you miss it, you miss it. There's always tomorrow. There's always 5 minutes from now. Right now, you're probably missing the best trade of your life in some market, whether it's Forex or some obscure future contract that's out there that's just rallying right now or dying or something like that. So be nimble. Don't be committed to bear and bull, and just look at the levels. You have levels. Just look at a price chart. Simple support and resistance. It works. I promise. What happened? There's our trading range we're in right now. May come up against the cloud. RSI might be overextended. That would make sense. But for tomorrow, I usually would make like a hypothesis of what I think will happen. But honestly, with this news, we just have to wait and see. I don't even know I know people are talking about a short squeeze in China. Um, maybe. I don't know if it just happens within a day or two. They might start shooting people if they don't buy, so a squeeze that soon is always possible. But if you look at stocks like BlackBerry and stuff, it takes a while. It's not usually not an overnight squeeze. So we'll see. Just stay nimble, stay vigilant, and don't get committed to one side or the other because we're still in a range. All right, guys. Hope you enjoyed this video. Check me out on Twitter at SwissMadeTrades, and good luck trading, guys.